Hi, I'm Dave Dinkle, and thanks for joining me for this video series of actual recent deals. This is an example of a $10,189.37 profit with no money in the deal. The following is a real estate deal that was recently completed by a student, and the deal exemplifies some of the various aspects of how we do transactions. For the sake of not embarrassing anyone involved in the transaction, all parties have been kept anonymous. I'm not a CPA, attorney, or realtor, and any information derived in this presentation is not to be construed as legal or accounting advice. This is an example of a double closing with the first leg, the A to B, being done with free transactional funding. So the student had no money in the deal other than an earnest money deposit that we'll talk about in a minute or so. The seller was an out-of-area owner, sells to the student, who then resells to the end buyer, who was an individual. The student had no money in the deal because he had a standing earnest money deposit with our ongoing closing agent that we use. No credit, there's no conventional lenders involved. No risk, as he had no money in the deal. And the deal was completed because the B to C money had been wired into the account. There's three interesting aspects in this particular transaction. The end buyer C paid his own buyer's agent. There was no money in the deal because the student had a standing escrow deposit, and he used free transactional funding. This was a student's first deal, and I'm going to put it in his words but re-paraphrase it. He took a one-day fearless real estate investing seminar that we have, and from that he learned some things that he had been doing wrong because he had been unable to do any deals for 3 years prior to that time. He started by doing mailings because he works full-time, and he mailed to out-of-state owners. He was able to get this property under contract in about 3 weeks, and we found a buyer through our wholesale buyers list the very first day that we had it. Okay, so here we have the A to B HUD closing statement, first page. Again, I've whited out, so to speak, the players in the game. It's going to be the buyer, seller, closing agent, various things like that. What we're going to look at is the actual numbers. Student paid $55,000 for the property. His closing costs from the second page look like they're about $1,200. Now, again, whatever the student pays, this is again buy side is the left side of the HUD, sell side is the right side. Whatever the student pays, the seller has to receive, so they balance to start out with. Student paid about $1,000 and change for his part of the closing cost, and he put down $1,000. Now, I've mentioned this $1,000 earnest money deposit a couple of times already. Our closing agent keeps a $1,000 deposit on hand for our students and issues them an escrow letter for each of the properties that they actually put out offers on, so they could have out 300 properties and not have to have $300,000 floating around. However, as soon as a contract comes into the office on the A to B purchase side, that deposit amount goes hard and the student can't use it for any other purchase. What I didn't show you here is there's no closing cost on the seller side of the HUD. We're going to look at that on the second page to see why. Here's the usual prorated taxes from the beginning of the year. Again, debit to the seller, credit to the buyer. And the bottom line, again, these are always the same. Accrued taxes are the same. These are for year to date. If there's previous taxes owed and so on, they're going to come out on the second page of the HUD. They're not here. So here's what the student had to bring in, and that was fully funded by the free transactional funding because of less than $80,000 in this case. Okay, looking at this more closely, the seller, who normally is debited and then credited the same amount to the buyer, was credited here by the buyer. So the bottom line on this is the payout was $55,000. So what the student said is, I will give you $55,000 for the property, no closing cost. And in fact, this closing cost was then credited back on this side. So let's look at the page 2 of the HUD closing statement. Since the student said no closing cost, you would expect that on this side of the HUD there were no closing costs. As you see, there are none. There's no commission involved. It was done directly. These are very simply fees for the attorney and abstract to the title, or the title search. This is the title insurance itself, and just costs and expenses that are normal. So it's looks like about 14 or 16. Whatever the number is, it doesn't matter. The key here is that the bottom line to the seller is 0. Okay, so let's look. This is the B to C HUD closing statement, page 1. Again, the players are knocked out. And here is the sales price. That's $68,500. Now our buyer is the end buyer, so it's on the left side of the HUD statement. There's what the student's going to receive less his expenses. If you'll notice, the buyer's expenses are $3,400. Seems like it's high. The seller's expenses, the student, is only $1,900 or so. Student put up a $1,000 earnest money deposit on the first HUD statement, and here is the end buyer putting up a $5,000 earnest money deposit. Purpose of that is if he walks away before the closing and he loses his earnest money deposit and our student can't find another buyer, or we can't before we can extend the closing, and he loses his $1,000, he actually nets $4,000 profit on it. This is the accrued taxes, which are the same as they were on the first sheet because we did the transaction the same day at double closing. Here's the bottom line. The buyer had to bring in $66,520. The student netted $10,189.37. That's what his check was. It's very unusual for someone to walk away with a check on that bottom line on the B2C side and say I made $10,000. Typically, if they had a $5,000 deposit up, it would have been included in that amount, so he would have only made $5,000. So very often times when you see students holding up checks for national gurus for picture taking, that isn't the actual profit on the deal. I had one of my students come up to me that's been, she's out of our system in terms of us selling them for her, but she showed me her closing check and it was $62,000 about a week ago. And I said to her, okay, how much did you actually make? And she said, gee, not most people would know that. And I said, how much did you actually make? And she said, well, that's my gross profit, but it cost me over $40,000 for the rehab, so I just made a little over $20,000 on it. Still not a bad profit, but it's not a great profit for a rehab. But I'm sure that she had that check because she was holding up pictures and saying, here's what I've done. Don't be misled by that. That really does annoy me. Maybe I'm annoyed by things I shouldn't be. All right, so here's the B2C HUD 1 statement, page 2. There's the key number. This is half of the closing cost for the end buyer. It's a $2,000 commission to what was over here. It's the actual buyer's agent. He paid a broker or agent $2,000 to find this deal for him. That's fine. We don't care. The agent probably came to us first and asked how much commission was in the deal, and we said none. So what he did is he had two choices. He could mark it up and sell it to his end buyer, or he could say to the end buyer, I can get it for you, but you need to pay me $2,000, and you need to pay it. The seller will not pay it. And that's what happened. So here's the attorney's fees and lien search. And same thing, attorney's fees for the student, closing costs. And there's the title insurance. Now, I didn't check the amount of the title insurance on the A to B, but we should have gotten a discount on the B to C. This $479 is transfer taxes on the property. These are recording costs, wire fees, usual junk stuff that needs to be paid. That's a lien search. Here's what's important. That $1,000, if you look at that, it says Investors Deposit Program. And what he did is he debited the student prior to the closing. So that's what made the student's closing cost $1,900. So that check that I said was the student's net check was in fact a net check. And of course the buyer was charged $3,900 because of these various fees. There's the student's amount of $1,900, I believe. So the final result, when all said and done, of this transaction, the student purchased the property from an out-of-area owner who had received it from her mom. She took her mom back to Texas, as a matter of fact. Mom quit-claimed it to her. The student agreed to pay the seller's closing costs to seal the deal. Now this pay the seller's closing costs is a very, very strong closing tactic to use when you're in the final stages of negotiation, because the seller never really knows for sure what the closing costs are going to be, and they're very, very moderate compared to losing the deal for $5,000 or $10,000. When you get down to that close, tell them, I'll tell you what, I can't go any higher, but I will pay your closing cost. I don't know how high that percentage is, but almost always it closes the deal. We sold the property the first day to a buyer on our wholesale list, and we did not have a bidding war of any kind for it, so the price he got was pretty much what he should have gotten. Student put up the $1,000 earnest money deposit as a revolving EMD, so the closing agent subtracted it from his proceeds on the B2C closing side, page 2. I showed that to you. His end buyer put up $5,000 earnest money deposit, so if the student would have made money even if the seller had walked away and couldn't close. The student's net profit, $10,189.37, because he got free transactional funding from the closing agent we use, was still a good profit for the price of the property. The student's net profit was $10,189.37 because he got free transactional funding from the closing agent we use, and it was still a good profit for the price of the property. Thanks for joining me, and I'll look forward to giving you your next video series of actual recent deals.